What if I told you the greatest wealth collapse in human history is happening right now, quietly, visibly, and almost no one is paying attention? Not with stock markets crashing, not with banks failing, and not with currencies hyperinflating, but with something far more dangerous. Real wealth is disappearing while digital numbers keep going up. Assets look higher, balances look bigger, net worth graphs rise to the sky, and yet purchasing power, security, and financial independence are slipping away like sand through a fist. This is the story of how wealth, true, tangible wealth, collapsed without a sound, and how, unless you understand why, you may already be part of the collapse without even realizing it. Stay with me, because everything you think you know about money may be wrong. When we talk about wealth today, we talk in terms of numbers, bank balances, crypto wallets, stock portfolios, net worth calculators, and rich list rankings. But 1,000 years ago, 100 years ago, even 50 years ago, wealth wasn't a number. It was a thing, something real, something usable, something rooted in the physical world. A cow, a piece of land, a barrel of grain, a house that could shelter generations, gold you could hold in your hand. Tools that were passed down, not traded like lottery tickets. Then something changed. Technology accelerated. Money left the physical world. We started measuring wealth with digits on screens, not resources in real life. And in the last decade, that shift exploded. People became millionaires through inflated asset prices, virtual tokens, digital collectibles, and speculative markets that produced value in the cloud but not value on the ground. We created a world where digital abundance hides physical scarcity. And for the first time in history, we have more wealth than ever yet. Real wealth is collapsing. But how did we get here? And what triggered this silent collapse? To answer that, we have to go back to the beginning. For most of human history, wealth came from one source: control of real, productive resources. Land that grew food, livestock that fed communities, timber, metal, grain, stone, boats, tools, physical labor, and craftsmanship. Wealth was something you could touch, hold, or trade directly. Then the first major transformation began. Instead of dragging sheep into the marketplace, people used gold coins, silver bars, and copper tokens. These weren't wealth themselves, they were claims on wealth. But they were redeemable, meaning if you held a gold coin, you held the labor, land, or resources behind it. This system held for centuries until governments realized a powerful truth. If money only represents real wealth, they are limited. But if money becomes wealth itself, they are unlimited. So currencies detached from physical backing, paper became the representation of value, and digital numbers represented that paper. Wealth shifted from things to symbols of things. But the story was just beginning. From 1980 to 2020, 3 revolutions changed wealth forever. Bank accounts went digital. Credit cards replaced cash. Trading moved online. Markets ran on algorithms. Money wasn't physical anymore. It was a database entry. And anything that exists only in a database can be created in unlimited supply. Next came financialization. Homes became investment vehicles. Commodities became derivatives. Student loans became asset-backed securities. Companies became profit projections instead of factories. The financial system started generating paper wealth faster than the real world could generate real resources. Then came crypto, NFTs, meme stocks, SPOCs, zero-commission trading, and leverage at historic highs. Everyone could become an investor. Everyone could print their own wealth with a few clicks. More millionaires were created in a decade than in all of human history combined. But none of this wealth was tied to the real world. Everything became numbers. Numbers can go up, even as the world around them goes down. This was the beginning of the silent collapse. But the breaking point was triggered by something bigger. The silent collapse of real wealth didn't happen in one moment. It happened through a chain reaction. Manufacturing slowed. Supply chains stretched across oceans. Local industries vanished. Countries became dependent on imports for food, energy, medicine, and raw materials. When the real economy weakened, the digital economy expanded to compensate. It created the illusion of prosperity. Meanwhile, debt exploded. Household debt, corporate debt, government debt, shadow banking debt, derivatives, unfunded liabilities. Debt grew faster than GDP, faster than productivity, faster than population. Debt became the new money. And new money inflated asset prices, not real supply. People felt rich, but their wealth was borrowed, not earned. Technology amplified the disconnect. AI generated digital value. Tech companies grew with zero physical output. Cloud wealth ballooned. We now had digital assets, virtual currencies, algorithmic valuations, and AI-generated productivity numbers. None of it required physical resources. The real world stayed finite. The digital world became infinite, and that mismatch became catastrophic. Here's where the collapse becomes silent and deadly, not with banks melting down or stock markets crashing, but with slow erosion. Home values skyrocketed, but construction slowed and ownership fell. People had higher net worth, but less ability to buy anything real. Official inflation said 3 to 6%, but the cost of homes, cars, food, healthcare, insurance, rent, and education rose 20 to 600% higher. Digital money expanded. Real goods did not.
Ow.
People became richer on paper, but poorer in life. If real wealth were a tank of water, the digital financial system poked 1,000 holes in the bottom. The water drained out quietly, slowly, one drop at a time. Most people never noticed. And here's the most chilling part. When real wealth collapses, but digital wealth rises, people feel rich enough to stay calm, but too poor to escape. This is the formula all declining civilizations share. A shrinking real economy paired with an expanding imaginary economy. It happened in Rome. It happened in the Ottoman Empire. It happened in the Soviet Union. And now it's happening globally. Governments tried to patch the cracks, but every fix made the problem worse. Printing money inflated digital wealth further. Lowering interest rates fueled borrowing and pushed asset prices higher. Quantitative easing addicted markets to artificial support. Temporary handouts filled the bucket instead of fixing the hole. Technology narratives promised productivity, but ignored the limits of real resources. Digital growth became infinite. Real growth did not. Today, the consequences are everywhere. In many countries, real wages are flat while home prices are up 300 to 800%. Mortgage burdens have doubled, and construction can't keep up. A generation is locked out of real wealth. Shrinkflation hides inflationless product for the same price. People with $1 million in crypto or $500,000 in stocks still can't afford homes, healthcare, or retirement. Their wealth is digital. Their lives are expensive. AI generates trillions in digital output, but reduces human wages. Digital wealth expands. Real livelihoods shrink. GDP rises because digital output rises, but factories close, farms consolidate, infrastructure crumbles, and household savings fall. GDP says growth. Reality says decline. Every empire collapses the same way. Wealth becomes symbolic. Real resources shrink. The currency expands. People feel rich. Society decays. And collapse seems sudden, but was slow all along. We are at step 4, maybe step 5. The window to act is closing. Real wealth means control of real resources: land, skills, energy, food security, tools, productive assets, businesses that create real things, not digital speculation. Real wealth erosion takes decades. Most people only notice when it's too late. Every year of ignoring the signs makes recovery harder. If your entire net worth is digital, you are exposed. Balancing the digital world with real assets is the only protection. The greatest danger in history is not losing wealth in a crash. It's believing you have wealth that isn't real. The numbers on your screen don't measure your independence. Your ability to survive economic shocks, technological disruptions, and resource scarcity does. We are entering an era where symbolic wealth evaporates and only real wealth matters. The collapse is silent, but it is real. The question is, will you adapt, or will you be caught in the greatest illusion of prosperity ever created? If you found this breakdown eye-opening, hit like, subscribe for more deep investigations into the hidden forces shaping our economy, and comment below. Do you think digital wealth is real wealth? Your voice helps shape the next episode. Stay aware, stay informed, and above all stay grounded in reality.